Which brings us, of course, to segment 2, what went wrong. Beginning in 2007, you've got housing values are starting to decline. Then last year, 2008, we get waves of defaults on subprime mortgages, which cause havoc in the financial system. Major banks collapse or nearly collapse. And a year later, we're still in a recession with unemployment at more than 10%.
Well,
what happened?
Well,
but I don't want your narrative first. I'm going to try out a couple of narratives that this layman has discovered in the popular press and have you comment on them. And then I'll get to your narrative, Richard. In particular, the text for this segment is John Cassidy's article in the first week of January 5th, as I recall, edition of The New Yorker, where John Cassidy, journalist, goes to the University of Chicago, Milton Friedman's intellectual home, and talks to some economists and to one non-economist, a fellow founder with you of the law and economics field, Judge Richard Posner. And Cassidy sums it up as follows, quote, largely as a result of misguided efforts to extend deregulation to the finance industry, we have experienced the biggest economic blow-up since the 1930s, close quote. Grade that.
About a B minus C plus. And the explanation, I think, would be as follows. I do think they made one serious mistake.
Who's they?
In this case, it was Lawrence Summers and so forth and Robert Rubin. They got rid of the margin requirements under Bush with respect to various kinds of shadow banking transactions, and that probably was too risky. But the other features, which were much more important, were the way in which Fannie Mae and Freddie Mae, mark-to-market, all of which were government regulation. On the first part, what they did is they really juiced up the financial markets, both on the private and the public side. Cassidy noted, well, private banks are doing this as well, but they were under tremendous government pressure to make the kinds of loans that made no sense. And then in the end, the bubble burst for the traditional reason. So my view about this period is that it's wrong to say it was a deregulatory period. It was a case in which Republicans lost faith with their previous views and the Democrats took over the ascendancy.
John, let me stay with Richard for one moment longer. I quote to you your friend, Richard Posner, now a federal judge, who earlier this year published a book called A Failure of Capitalism. Quote, we are learning that we need a more active and intelligent government to keep our model of a capitalist economy from running off the rails. Posner also, in an article in the New Republic, praised John Maynard Keynes' 1936 book, General Theory of Employment, Interest, and Money. Quoting Posner, despite its antiquity, it is the best guide we have to the crisis, close quote. Now you, lawyer that you are, explicate for me Posner's position in making the strongest case for his position that you can.
Well, I mean, it goes back to the previous statement. If you treat the breakdown in the current system as being a failure of private institutions to equilibrate on matters of risk, then the only choice you have is government. Clearly, you don't want to have a dumb government, so you may as well have a smart government. And what Posner said in that article, which I regard as quite bizarre, is that the moment you engage in the stimulus-type activities, it shows that governments care. The way I look at it is you either have public or private creation of jobs. Governments will create a few jobs and destroy many more. Private people will create jobs that produce benefits. I mean, you could create jobs digging oil wells with spoons, and that's a job, but it gets you a higher rate of unemployment. So the prediction would be the more the stimulus you have, the higher the rate of unemployment.
John, in the first segment we said that between the 70s and the 80s, we actually feel we're getting someplace. We have this financial crisis, and quite a lot of members of your profession, economists, proved, to my mind, remarkably willing to toss Milton Friedman and the experience of a quarter of a century and more overboard. Case in point is Richard Posner, who had been a stout Friedmanite and monetarist before then. So can you, again, I want to get to your views, obviously, but what is going on in their minds? What is the case that they see that causes them to toss what seems more than a quarter of a century of experience overboard?
I think that they're not realizing the big change that happened in policy. Very low interest rates, for example, by the Fed, didn't perceive that as early as other people did. They sort of saw this as a big recession and wanted to do fiscal policy instead, so they used that, we need something special. But I think they're wrong. I think it's basically, if this pattern is so clear, bad policy in the 70s, not good results. Good policy in the 80s, 90s, good results. And then getting off track in the recent period, bad results.
Okay, so give me then, as tightly as you can, your analysis of what caused the financial crisis of '08 and continues to cause the recession today?
It got started with very low interest rates in 2002, 3, 4, much different than the kind of policies in the 80s and 90s. That stimulated and accelerated this housing boom and other risk-taking, and when it crashed, we basically had the defaults and the problems with the banks. It was accentuated by other government policies, in my view. Richard mentioned Fannie and Freddie as part of this, encouraging subprime mortgages, encouraging extra risk-taking. But I would go on as when things got really bad, we saw there was a problem in the banks. It was misdiagnosed as a liquidity problem, just pump more money and it would be fine. And then finally, in the real panic of 2008, really a lot of intervention, a lot of attempts to intervene with particular firms. And I think that scared people, caused the panic. Yeah. So those three things.
So let me see if you would both subscribe to this simple summary. We have essentially two competing narratives for what happened. And one narrative, to which Judge Posner seems to have subscribed, and Lord knows lots of the other economists have subscribed, is that in one way or another, the markets failed.
Well, let me give you an illustration.
Hold on. And the other narrative is, as John just suggested, the government messed it up. At a minimum, the government created the conditions through loose money that made the financial crisis much more likely, if not indeed probable. Go ahead.
Let me just say on this, because I think you say most economists. I mean, they just did a survey of economists who they were asked whether interest rates were too low in this period, whether there was too much ease in monetary, and they concluded there was. 75–80% were on the side this was too easy policy.
It's not clear which way that profession goes, but I want to mention one other factor which you haven't talked about.
Go ahead, Richard.
Which is, once these mortgages are underwater, what do you do with them? And the correct response is to allow the banks to make the choice between foreclosure on the one hand and renegotiation on the other. In many cases, the people who bought these premises paid very little down, and a foreclosure is nothing more dramatic than being told that you can't renew your lease. The moment you keep these mortgages alive, the property prices can't go back down to their natural levels. The properties deteriorate under the management. And banks thinking about future loans will recognize that if they can't be sure that they can get their money back in the terms that they want, they won't lend. And so these policies, in effect, at the micro level, have made it clear that it's much wiser for a bank, which could borrow very cheaply from the Fed, to lend it back to the Fed at a higher rate. So you're not going to get any kind of lending unless and until you strengthen the guarantee. So the market failure I'm talking about is the complete disruption of the mortgage market, which has been done through all sorts of government regulations. Always a failure.